WCLN 1170 Radio and Cable Channel 16 are pleased to present We Should Know, hosted by J.W. Simmons, an upbeat, informative look at people, places, and issues facing our community. This education-based analysis of issues will remain positive and informative as we consider closely what we should know.
Ladies and gentlemen, welcome back. Thank you for being with us today. My name is J.W. Simmons. I'm your host. The name of the show is We Should Know. We're coming to you on Star Communications TV Channel 16, WCLN Radio. We hope that you're having a great week. We certainly are, and we're talking about banking today. And yes, that's money, and yes, that's your money. We have a guest with us that's been around, has got experience, and his background is right here in Eastern North Carolina. Will Johnson is the Vice President, Area Manager of Southern Bank and Trust Company. Will, thank you for taking time to come in and having a conversation about what's going on in the banking industry.
Yeah, absolutely. Thank you for having me.
You just got back recently from Washington, D.C.
Yes, sir.
And a summit conference of banks with American Bankers Association.
That's right.
Literally representing banks all over this country. Over probably 1,200 banks were represented there.
Right.
Secretary Janet Yellen was the opening speaker. Mm-hmm. The conversation, of course, was around exactly what I want to go ahead and get into this morning. This whole idea of banks defaulting, of banks having significant problems. And yes, we're talking about Silicon Valley Bank. We're talking about Signature Bank are the two that has been held up.
Right.
Kind of give us your overall, and then we'll get into some detail of what you have acquired from that conference. And at the same time, maybe before you get there, kind of tell us what intrigued you to get into the banking business, because you got a kind of a long record. You worked with the State Employees Credit Union, senior financial banker there with the credit union. You've had a number of years going through the process with Southern Bank. You know all the trails and the side paths. Kind of tell us why that, and talk to us about that, and then let's get into some of the real meaty stuff about what's going on with the banking industry.
Okay. Yeah, so like you said, started with the credit union August of 2009, and at the time, you know, what was going on in 2009 with the financial crisis and the boom or the bubble burst of the mortgage industry. So I was fortunate to find a job at the time. I've got some family members who are in banking, got my undergrad degree from Barton, and wanted to get into banking in some form or another, because I didn't know a whole lot about other industries, but knew banking was a solid place to work, dealing with public, talking to people, helping people, all things I like to do. So got in with the credit union, worked with them for about 4.5 years, and then transitioned over to Southern just over 9 years ago. And at credit union, really got the base of understanding how everything works from the banking side. While it was a credit union, still acts like banks do. Mm-hmm. Got over to Southern and, you know, exposed to more on the lending side, more commercial and small business side. And in doing that, got involved with the North Carolina Bankers Association. North Carolina Emerging Leaders is the council that I'm on. And we've been able to go up to Washington, D.C. for the ABA Washington Summit. It's something that they do every year. I was fortunate enough to go last year. And, you know, those were comfortable conversations. It was an election year, so we didn't get into a whole lot of pushing what we want them to do on the banking side, but it was more relationship building, meeting with Senator Burr, Tom Tillis, Deb Ross. We had, I want to say all but one of our legislators come and meet with us. This year, same thing, looking forward to going. And about 10 days before what happened, Signature Bank, Silicon Valley Bank. So I got really excited about going because we were going to be getting into the meat of it and being able to push what we feel like we need in the banking industry, whether you're a community bank, you're a regional bank, you're a money center, national bank, we all do the same thing, just on different levels. Mm-hmm. So what we wanted to do going and meeting with our legislatures was just explain to them, one, our customers are okay. We've had a couple of people that have asked, but each bank and the banking industry as a whole is strong, is stable, it's solid. these were just kind of outlier situations that happened that caused a lot of fear, and more regulation is not what is needed.
Do you find that when you, of course, when you went to the conference this year, all of these other banks, and of course, I'm sure you had a lot of time to, interact with some of the other banks in the country. Are they facing this same kind of thought process to a need to reassure their customers, their banking members, that things are solid with that bank, that it is this outlying situation? Because Secretary Yellen, in her opening comments, really put that out there, that look, we're dealing with two banks that had some problematic issues. Community banks and some of the local banks are some of the solidest banks in the country. She really wanted to make that point.
Right. Yeah, that seems to be the consensus. We sat around. Our legislature was actually on a retreat in Florida, so we didn't get to meet with them directly, but we met with Shil Patel, who's chief of staff, with Tom Tillis and some of the other Hill staffers. And what we did, a few of us went around, just kind of explained what the past 10 days had been like, where we're fielding customer calls, basically doing exactly what you said, reassuring them and letting them know this is not an industry-wide issue. This is not a banking industry. These were outlier situations, whether it was, regulation that wasn't done properly, management that wasn't done properly, banks that were focused in more risky areas and, had to do some things that your typical bank wouldn't do, that kind of got them in the situation they were. Like you said, Janet Yellen and Patrick McHenry both made a point to speak about how strong, solid, and resilient the banking industry is.
The thing that strikes me often is with banking is almost like a lot of other things we have, to include, say, utilities. We really don't question it as long as we know it's there. We don't have any problem with it. But if the lights blink, we're going, well, what's that was? What is this? And the big thing I want to do today is to try to reassure folks through your knowledge and through your experiences. If we have a good system, is there things that need to be fixed? What has it caused you to do as a manager and in the position you're in to look at? Is there things that has happened as a result of this exposure just recently here that's caused banks to say, maybe we need to look at this liquidity asset value, we need to look at that? Or do you feel comfortable with where it's at?
Well, I'll tell you, obviously I can pretty much only speak for Southern Bank, but I know as Southern Bank, we're very conservative. We've been around for over 122 years, have always based our philosophy on conservative values. We've got a good board of directors and senior management that do the same thing. So when I take a look at our balance sheet in comparison to the banks that failed, we're in a different position. Take away the amount of dollars and just basically put it on the percentages of what investments you have. Ours is more balanced, like probably just about every other bank that's around here. The way that banks use the deposits is to be able to lend them out. If they're not able to, they have to invest. And that is kind of what Silicon Valley got into. They had so much they weren't able to lend out. They invested. They ended up being long-term investments. As the interest rates rose, those lost value, so they were not able to sell them off as quickly and actually have the funds to be able to pay the depositors, which is what kind of caused the feds to come in.
Do you feel that, and you alluded to this just a while ago, you mentioned additional regulations and those kinds of things. Do you feel as a result of these two banks that there may be some kind of a wholesale movement on the part of the government to over-regulate or overreact, should I say, and create problematic issues for community banks that are doing great?
That's what we're hoping doesn't happen. That was one of the things that we stressed to Shil Patel, because Tom Tillis is head of the banking committee. So we wanted to stress to him, this isn't something that needs more regulation. It has nothing to do with the previous Dodd-Frank Act. This was just simply outlier banks that, because of the size of them, gained national attention. Then you factor in where technology is today. And I think it was Patrick McHenry who said, if it wasn't Patrick McHenry, it was Senator Brown from Ohio, who said, I think the last time that there was a run like this on a bank was 1857, right after the telegraph was invented. Mm-hmm. New technology, quicker communication, same thing with Twitter, Facebook, and all the other social media. And they actually said this may have been more of a run on Twitter than it was a run on a bank, because it was inciting fear in one way where it may not have been warranted.
I read one article that talked about that this whole occurrence of events brought up something that has been there, but it agitated something called confidence. And lack of confidence oftentimes creates hysteria. In a hysterical kind of moment, mm-hmm. It's that thing that causes us to react in probably a bad way. Is that really one of the things we're talking about here, is this lack of confidence?
It is. That's kind of what I think caused the run on the bank, so to speak, and that's what we're trying to reassure our customers, reassure the banking industry of, is there is still a very strong banking industry. You need to maintain confidence in your bank, whether it's Southern Bank or whether it's another bank. They're strong, they're solid, they're resilient, and they're there to help the customer. A lot of what has been talked about is the FDIC insurance recently. Go into your local bank, have a conversation with the customer service representative or branch manager or your banker about the FDIC insurance, and see if there's ways to expand that, because there's different options to be able to add on to that or structure different ways to help with that. But if it's something that is a concern, I recommend having a conversation with your banker or your banker.
We're going to take a break. When we come back, I'd like to kind of get into this whole idea of what you just alluded to, which is, what do folks typically expect from a bank? What should they expect from a bank? And what are the kinds of things that banks are trying to improve on, not only in technology, but meeting the demand of technology? Because it's changing so radically, it's like on a daily basis, I'm looking at that as I'm amazed.
Yeah.
So we'll be back in a moment. We're talking with Will Johnson. Will is the Vice President, Area Manager, Southern Bank and Trust. We'll be back in one moment. Stay tuned.
Providing fewer commutes, more backyard offices, and crystal clear meetings. Providing less, you froze up, and more presence in your presentations. Providing a better internet experience. Providing possible.
You're out for an evening on the town. Finally a chance to relax and forget that you left your front door completely unlocked. Fortunately, you just installed a security system from Star Communications. With just your cell phone, you can check on your house, lock it down, light it up, and get back to relaxing.
You forgot to put Buster in his crate.
Unfortunately, we can't help with that. Security and automation from Star Communications. Call today to find out more.
Most aging adults want to stay in their homes as long as possible. And as your loved ones get older, you want to support them, even when you can't be there. Star is proud to offer Star Alert. This new system is now mobile and has GPS compatibility, so your loved ones can live their lives and you can have peace of mind, knowing they can get the help they need with just the simple push of a button. The new Star Alert also offers automatic fall detection, so help will be alerted even if they can't press the button. Call and ask about Star Alert today.
Ladies and gentlemen, welcome back. Thanks for being with us today. We Should Know's on the air. We're talking to the person that knows a bit about banking, the Vice President, Area Manager, Southern Bank Trust Company, right here in this area of North Carolina, Will Johnson. Will, thank you for being with us. We pointed out in the first segment that you just got back from Washington, D.C. and a big conference, a summit up there with banks all over the country. We're talking about stability of banks, and we kind of addressed a number of issues in the first segment. I want to kind of go to this second part of the show and try to focus on what you're seeing and what banks are seeing as expectations of their customers. What is changing in the times of technology? What does a customer look like now? Even if you look at it, oftentimes folks will tell me, why do what I even need to go to a bank. I mean, everything I got is on my phone. And I kind of look stunned because, again, folks know that the kind of the age bracket I'm in. I'm thinking, I like to see who I'm dealing with, you know. And then I think it's important for folks to see who Will Johnson is.
Right.
But there's many people that I talk to that go, I could care less.
Yeah.
I'm looking at the interest rate. I'm looking at what, you know, if it's an investment, I'm looking at what the CD rate is now. I might sell that boat and put it in the bank at 4 or 5%, and I couldn't have done that 6 months ago. Kind of just refresh us on a lot of that stuff. That's a lot.
I was going to say all customers are different. All customers want different things. They look different. And I know at Southern Bank, what we like to do is be a relationship bank. We're about $4.7 billion in assets and have grown organically over time. And as we continue to get bigger, we want to still feel small, which is why we have folks working in our branches who live and work in the community that they're from, so that you do have somebody you know when you walk in, if that's what you want. If you don't want it, you know there's a phone number of somebody that you can call, but we've also had to shift, just like everybody else, on the technology side and offer the mobile app, all the digital type of banking that everybody's offering to remain competitive. And that's where it's all shifting. You know, we still are very big in brick and mortar and having people, even though maybe the foot traffic is slowing some because there's so much of the banking being done online, which I've had this conversation with a lot of people. I feel like COVID pushed us there. I mean, all the banks closed their lobbies, and we started pushing people to drive through only. Hey, we've got a mobile app. You can do this online, and kind of making them realize that while we want you to come in, you know, we can still operate. You can still get your banking done while our lobbies are closed. I think that's where banking was going anyway, but COVID and having to do all of that sped it up 5 or 10 years at least. I know there's some places now that maybe don't have a teller. They have a screen that you tap the screen, somebody pops up on the screen, and you conduct your transaction with somebody who's sitting, I don't know where, but you see them on the screen. Sure. So that just kind of shows you where, from a technology side, where banking could be going. Again, those are kind of those are the folks on the forefront of the technology side that may be bigger, but you know, at Southern, we're still very much wanting people in the branches, keeping the brick and mortar, and wanting to have the relationships with our customers. You know, we want them to know who they're seeing when they come in, and we want our employees to know who the customers are.
How does banking look from where you sit with the banks? It just seems that there's banks everywhere, and new banks popping up all the time. What does competition look like? What does that kind of embode? I mean, you just left a conference with over 1,100 banks, probably more than that. Maybe even we're online up there. When you look at that seems to me a lot of stores. If you're looking one soda pop, you know what I'm saying? And all of a sudden, everyone goes, I've got that. Yep. How do you compete in that kind of industry?
Well, and that's where the relationship comes in, and having the people who are in the community that branch is serving, having them form the relationship with customers, prospects, what we call centers of influence, people who know people, and connecting with them, and they are identified as somebody that if you need something, they can help you. You know, call this person, call that person at Bank XYZ, and they'll be able to help you out. So that's what all banks are trying to do. And you know, we compete against banks and credit unions, it seems like, every day. And you try not to just get into the pricing game, but really selling that relationship. And, you know, if you need something after hours, you got my cell phone number. On the weekends, you got my cell phone number, that kind of thing.
When I look at recent things that have occurred in the banking industry, one of the things that has happened, and I'm sure you have seen this, and you guys have been probably watching it way before I have, obviously, but there's this whole thing now that is switched. We were looking at money at like 2.75, ridiculous kind of borrowing money at that rate, even unheard of. I think historical lows. And all of a sudden, because of something that may be happening in the system, Jerome Powell with the Fed has started pushing that number up that we call an interest rate.
Right.
And we just got bumped again just this week, another 0.25%. Talk to us about what's happening within the financial industry, within that whole banking system, when you start moving that finance rate up from an unbelievable 2+% to now what, 6?
8%.
Yeah,
is prime rate
it's
currently.
unbelievable where it's going. And some folks even predict a double-digit interest rate because consumers look at it. You know, folks like me and others go, wait a minute, what does that mean? Well, you know, if you get a car, you're going to pay 5-6 times what you did just less than a year ago.
Right.
This is kind of foreboding in a way.
Yeah, it is. And the pace at which it has risen is generational. I was speaking at a lunch a couple of months ago, so I went and I did some research on the last time prime started being raised. So back in 2009, I believe it was April of 2009, it dropped to 3.25%, where it stayed for a while, which was after the bubble burst, the last financial crisis we had. And then I think it was in 2017, it took about 2.5 years, they moved it up to about 5.5%. So slowly, and then COVID came, and in April of 2020, they dropped it back to 3.25%, and it stayed there until they started moving it again. And at that time, in 9 months, it had gotten up to 350, I believe, and it had gotten up to over 7%. So in 9 months, it had moved more than it had moved in 2.5 years. And what they're trying to accomplish is to slow the growth, get the inflation rate back down to 2%. The inflation rate got up almost into double digits. I know it was at least around 8%. And so they feel like increasing that interest rate is going to slow some of the growth, some of the borrowing and things like that, that'll get the inflation rate back down to 2%. Not real sure why the 2% number, but it's just something that's kind of globally seen as a good inflation rate.
Well, the Fed Chair Powell, and I think what I'm hearing is some folks adamantly disagree with them continuing to raise the interest rate and the idea of slowing the economy down. Other folks will say, well, wait a minute, why do we want to slow the economy down? Everything was going good. We were more products than ever had been. In fact, we were selling them so fast we couldn't, the shelves was empty.
Yeah.
That means more manufacturing, more jobs. It's almost like the train is going so fast that the wheels is going to fly off, or what? We don't get that.
Yeah, I don't completely get that either, because you bring up a good point. Things are going well. Things are moving. House sales, house values. Yeah. And personally, I don't know enough about this part to even be dangerous, but personally, I feel like the rate of the value of everything was going up so much in relation to wages. They just kind of had to figure something out before we got too far underwater. Again, that's just kind of my personal opinion on it, because I don't know enough about that aspect of it.
Well, I think it's hard, and of course we're talking about something today that folks that I'll go ahead and admit, the folks that do this obviously, and I'm sure our audience understands that there's people that do that. That's all they do is look at those numbers, and they understand how to tweak this and how to move that. But at the same time, it gives folks a little bit of sideways thinking. Well, how is this affecting industry, and how is it affecting businesses, and how is it impacting businesses if all of a sudden my interest on my expansion on my building or my property that I was going to do, I have to rethink it because it's just gone from a percentage rate that's going to bump it from maybe $1,000 a month to $2,000 a month.
Right.
And the product I was going to sell, that means I've got to bump it to be able to pay the interest rate.
Exactly.
So is it a systemic problem?
I believe so. I've run into people who that exact scenario. They've been talking about building, maybe even talking with the builder, whether it be commercial or residential, and the prices of building are kind of starting to level out some, but you're not going to have that interest rate in the 3s or 4s. Now you're looking more in the 7s and 8s, which is at least double interest. Same thing with car loans. I was speaking to somebody not long ago who was asking about car loan rates, and I told her, I said, current prime rate is 7.75. That just kind of gives you a ballpark. And this lady was blown away. last time she borrowed money to buy a car was in 2016. Prime was 3.25 at that time.
Wow.
And so there's a lot of sticker shock also with people who may not have to borrow money very often, that, you know, borrowed it several years ago and come back now and are still expecting those 3%, 4%, and are here in the sevens, that kind of make them rethink, do I need to buy this? Do I need to build this? Do I need to do that expansion?
One of the things I'm sure you're aware of, you grew up in this area, you understand folks here very well, is that the big, huge chunk of money that's involved in agriculture here. And I read an article, and I think it was on the American Bankers Association website, and their journal, that talked about the increase in ag business was like $103 billion increase. This is an increase.
Right.
It's not what the commercial banks are doing. When we come back, I want to kind of get into that a bit, because a lot of our listeners are folks that today are on tractors and listening, that kind of thing. So I want to talk about that for a bit. Okay. Ladies and gentlemen, stay tuned. We're going to talk about some of the ag loans and ag money. We'll be back in a moment.
To get the most out of your electronic devices, you need a strong internet connection and a protected home Wi-Fi network. You need high-speed internet from Star. Star has the fastest, most affordable high-speed internet service available for all your devices. We have no long-term contracts or high-pressure sales. Our service speaks for itself, and switching is hassle-free. We take care of everything with free installation from a local company. High-speed internet from Star. Internet at the speed of light. Just because something may work doesn't mean it's right for your business. Let Star Communications' knowledgeable consultants help you customize a hosted voice system that's right for you. Our dedicated experts work with you to understand your business needs and guide you at every step, from choosing and installing services to ongoing maintenance and support. Contact Star today.
Ladies and gentlemen, welcome back. We're talking with Will Johnson today here on We Should Know. He's at Southern Bank. He's a regional manager, and he is vice president with Southern Bank, and has a stellar background and track record. There's a lot that's going on, and one of the things I wanted to kind of get into in this segment, Will, is to talk a bit about the banking industry as it relates to agriculture. Ag is huge in this area. A lot of farmers I talk to, or they'll, mention to me different things about what they're going through, and it is a day-to-day lifestyle. I mean, these folks, as you know, they live this thing called ag 24/7. Someone will say, "Well, I got away for a while," or I did this, but the truth is they'll also admit to you, but I still had this on my mind.
Right.
Whether it's protein production or whether it's row crops. 1.103 billion increase in ag business and commercial banking. That's the increase just in 2022. That's huge numbers.
Yep.
Which tells me that's a very small slither of the amount of money that is being invested in ag. Talk to us about how the banking industry is dealing with that, and is there competition for the banking industry in other kinds of banks or financial services that is now coming into the picture?
Yeah, so ag is a big part of what Southern Bank does, and frankly, Eastern North Carolina, that's what helps the economy flourish. Before coming to this way, I was in the Rocky Mount Wilson area for a while. Wilson's the tobacco capital market of the world, and then down here in Sampson County, with all the row croppers that you have, plus the swine production, poultry production. So it's, Eastern North Carolina wouldn't be what it is without ag production. And you mentioned the increase of $103 billion, which is obviously nationwide, but some of that, you think about the input cost, the increase in that some of it was 3 times the values and the cost of the tractors and the combines and the sprayers, and just the typical upgrades that a farmer will do to make sure their equipment is up to date and working properly, that has increased that. Now, as you mentioned, the competition, more and more banks are competing against it. We're also getting the competition from other types of credit unions, third parties that are getting into the ag industry because they see, how well it's doing. Because typically what we see is the ag economy runs different from the typical U.S. economy. So if the U.S. economy is doing great, the ag economy may not be doing as great. So then as there's a correction, you'll start seeing the correction in the ag economy. And we understand that. People who bank in Eastern North Carolina understand the way that it works, and that you've got to work with them to get through, because, we understand how important the farmers are to the country.
When we start looking at things like interest rates and the ability not only to borrow money, but to be able to pay it back, and this idea of cash flow. And again, I keep reminding folks, you just got back from that whole industry in Washington, D.C., which is a whole nother world of think. But do you feel like folks are really getting and understanding the ag business, the ag industry, and the outlying connectivity that ag has as it relates to everything from the food chain to impacts on grocery stores? And sometimes I think when in talking with farmers, they'll go, I'm just not sure that they get what we do.
Right. I think there are a lot of people that understand the impact that it has, raising a hog and having it to go be processed and sent out to grocery stores. Same thing with chickens and turkeys and tobacco and produce, whatever it may be. There's a lot of people that do understand the connectivity that it has to the economy, but then there's other people that are a little more, I wouldn't say narrow focus, but more tunnel vision as to, well, they just do this, they just do that. And they don't understand, one, the impact that it has on you being able to buy food, but also the impact that it has on giving jobs to other people in the community that helps keep that economy going.
And I think the other thing the question would be, when we look at the business of banking, of which you know very well, the business of banking is also a product and commodity that you sell to people, that you have to look at in some way that is going to keep the lights on at the bank, so to speak. It's going to be able to have enough asset value to run the bank. So there is a margin there that's called profit margin that banks have to look at. Are you comfortable in knowing what you know and looking at all these integral operations to feel like banks are solid enough to sustain over the next decade, 2 decades, and those kinds of things?
Yeah, I do. And what you're alluding to is what we call a net interest margin, which is why typically a loan rate will be a little higher than a deposit rate. But also that goes into, like you said, keeping the lights on, paying for salaries, paying for everything that goes in, insurance, all of that kind of stuff. The more and more volume you do, obviously the better that gets. But what you'll also see is some banks who may not focus on as much of a profit anymore, not anymore, but for a short period of time, because they understand we need to work through this. We need to help our customer. While yes, the idea at the end of the day is to make sure that shareholders, make a good return, but at the same time, our most valuable asset is our customer. So without the customer, we're not going to have a bank. So what you'll see is kind of, at least I know with Southern, while we're still very focused on doing business and doing good business, is we want to make sure that our customer feels like they're very taken care of.
One of the things I want to try to get in with this conversation, which is not really directly at ag, but before we get too far down here and you're gone, is this idea of the impact Bitcoin in the whole banking industry. I know this was part of one of the things I saw on the American Bankers Association, that they're very, very much on top of this kind of thing. All of a sudden, that was kind of huge, and I had some folks come on and talk about it, and then it's kind of dwindled away. But yet, I still see things related to Bitcoin out there, and this whole chain idea in banking. Has Bitcoin taught the banking industry something? Or does the banking industry need to teach Bitcoin something? It's kind of like it's still there.
Yeah.
It ain't gone away, and nobody really don't seem to totally understand it.
Right.
But it doesn't have any tangibility.
Yeah, and that's the thing, is that there is so much unknown about it. You know, I kind of relate the run up on Bitcoin to what happened at Silicon Valley Bank. There's a lot of social media about it, news reports. So what are people going to do? Oh, I need to get into Bitcoin. I need to get in. It goes up. It gets very high. People start selling off, and then all of a sudden there may be a negative connotation with it, and the value decreases. So I say all of that to say it's very volatile. We at Southern don't do a whole lot with, or really anything that I know of with cryptocurrency.
Yeah.
Which is what Silicon Valley had gotten into, and there's just so much unknowns about it that I frankly don't know enough to be able to say whether we've taught them anything or they've taught us anything, other than we know the value of $1. And while there may be some fluctuation in relation to other things, it's not as volatile as a Bitcoin or other type of cryptocurrency.
There's a certain amount of regulation also, I think, that is important with financing. And one of the things that struck me in the conversation we previously had with some other folks about the idea of cryptocurrency was there's not a regulated, it's not like a regulated industry. So if and folks decides to toss 10,000 out or 100,000 out, it's literally in the wind based on some idea that folks don't understand, but yet there's still that presence in the market. I mean, you still run on articles where people are still growing huge computer chains that are doing that. And when we're looking at banks and banking industry, is that something, if somebody said, well, I'm going to invest with Southern Bank or Truist or whomever, is that something we should look at and say, hey, are you guys involved with cryptocurrency? I mean, is that a caution flag?
I don't know. I think it would depend on how much they're involved in crypto. Again, because we don't deal with it, at least at Southern as a community bank, it's hard for me to say, yes, it's a red flag, no, it's not a red flag, because I still don't understand it well enough, because I understand, like you said, they build the computers to mine for the Bitcoin, but also my understanding is there's a finite number of the Bitcoin. So it's not like, we can print more money, you can't create any more Bitcoin is the way I understand it. So at some point it's got to be all of it has been mined and the value is there, and then they adjust the value based on how many have been mined. I just don't understand it well enough to be able to say yes, no, or indifferent. There's
nothing that backs it up, I think is what most people say to me, is there's nothing that backs up this. And some of the folks that we've had on would have alluded to that idea. There's no credible backing to it as you have with banks and regulations and those kinds of things, although that's kind of foreboding when you start talking about regulations to some degree, but it's important. I'd like to, as we kind of get prepared here, we'll go into a break, we're going to come up on the last segment. I want you to kind of enlighten us, should I say, on some of the expansion that's going on in the whole world of technology, and look at some of the things that the banking industry as a whole, as you see it, is looking at, and some things that maybe we need to think about. This whole idea of alternative intelligence and these kinds of things is just completely blowing an old guy like me away, because I look at it and go, wow, it just did what? I can talk to a bot and it can write this and it can prepare my financial statement. And I'm thinking, I'm not sure I want to get that deep into it. So when we come back, we're going to talk about the importance of keeping up with technology in the banking industry. Ladies and gentlemen, stay tuned. We'll be back in a moment. We're talking with Will Johnson, Southern Bank, and we're talking about issues facing you in the banking industry. Stay tuned.
Experiencing slow internet? If you have a fast internet package, the problem is most likely your wireless router. With more devices using Wi-Fi, your wireless router may not be able to deliver the speed and coverage you need. We now have the leading solution to enhance your internet experience. Using small devices in a mesh network, these Wi-Fi appliances cover just about any size home, so that all your devices can operate to their fullest potential. Whole home Wi-Fi from Star Communications. Get the most out of your internet connection.
Eastern North Carolina is a beautiful place where we gladly choose to call home, and we strive to provide the best communications services. Star is committed to improving communications to all our service areas because we want to improve the communities where we not only work, but also live. Star Communications. We are neighbors serving neighbors.
Star 16 is your channel for local announcements, event information, and scenic camera views from surrounding areas. Enjoy local programming such as At the Table and the We Should Know Show, along with other special community presentations. During the months of March and April, Star 16 will feature the Community Storytelling Festival series with a new episode airing each week and previous episodes uploaded to Star's exclusive local video on demand. Star 16, bringing the local community to your living room.
Ladies and gentlemen, welcome back. Thanks for being with us today. I'm J.W. Simmons, your host. The name of the show is We Should Know. We're coming up on our last segment. I want to thank you for listening and thank you for your comments. Remember, you can reach us at weshouldknowedu@gmail.com. As always, send us your comments or recommendations or drop us something to the Post Office Box 1482, Clinton, North Carolina. As we go into this last segment with Will Johnson, Vice President, Area Manager of Southern Bank and Trust. Will, I almost want to pause here for a moment. I want to kind of toss Chris Driver's name in and thank Chris for helping put this conversation together. He could not be here today. He's the city exec here for the local Southern Bank. Chris does a great job, and I've known him for a long time, which comes to the idea of the conversation for this last segment. Traditionally, and folks with the TV side can look at me and know this, I got to admit it. Traditionally, I'm the old guy that's seen things change so rapidly, not only in the manner of years, but the idea of a personal relationship with your banker, the idea that if you go to the bank as historically back in the 60s and 70s with your hat in your hand and say, I need to borrow $10,000 for whatever, you sat down with a guy in a suit. He was typically another older guy or older than I was, and you would work that out. That's gone, and we're moving into an era now that is called financial technology, or acronym FinTech. And FinTech, according to a Forbes article that I recently read, is really revolutionizing almost everything in the banking industry. How does that affect local banks? Is it positive, negative, or both?
I would say somewhat it's both, because one, it's negative because people basically on their phone, what everybody has with them, they can go on to a website and say, or just go to Google, how can I borrow $10,000? And, a list of companies will come up and they can go in, apply, and almost have instantaneous approval. Where it's positive is you have people that like the personal touch. They like to be able to sit down with somebody and explain everything to them and know that they're giving their information to somebody and not just throwing it out somewhere. So, and you'll see more and more with the fintechs where it will feel like you don't need the actual employees in the branch, which is what we want to stay away from. Like I alluded to earlier, we want to keep that personal touch. We want to make sure that our employees know the customer and the customer know the employees.
And it's interesting you mentioned that, because one of the things one of the predictabilities is this whole fintech space is going to multiply and reach at somewhere around $174 billion this year, 2023. We're not talking 10 years from now. We're talking this year. We'll reach that space of using technology in banking, $174 billion. That's, for somebody that grew up in Eastern North Carolina on a farm, that's hard for my brain to process.
That's significant.
Numbers. Is that going to push local community banks to become more present and be involved more in the technology piece because the expectation is going to be there?
Yeah, I think it'll make every bank have to invest a little more into technology in one way or another. You'll see on some websites there may be a little chat bot, is what I call them, in the right-hand corner, where you can enter your question, and if it can give you an answer, then you're satisfied. If not, then it may connect you to someone live. actually, while we were up in DC, we had somebody who showed us the Chat GPT.
Yeah.
And went in and basically said, hey, type a letter about this person has overdrafted their account and be nice. And within 10 seconds, there was a letter that was written like they knew what they were talking about, and it could be changed like that to, change it to be this scenario or that scenario. So with that capability, then you start wondering, while fintech's great and it's got the instant gratification that we as Americans have become used to, is it good for job stability?
Wow. And this is something that our listeners and viewers are, I'm sure, are aware of. And particularly what is interesting to me is that over the years, the ability to adapt and be involved in has been done. I mean, we got ag people are very smart folks. We got some very smart people, and they adapt well. But at the speed of what's happening here, I'm just wondering, at some point in time, will it be as is what it's being purported to be, which is going to be a stress-free environment in which folks can go in and, as you just said, I need to borrow $100,000 or $2 million or whatever, and it's stress-free. You just type in the information, send it, and they go, yeah, there it is, thank you, bye. And then is it going to be stress-free, or are we creating another system of technology this is going to require constant maintenance and explanation?
Well, it's probably going to require constant maintenance and explanation. It seems like a lot of deals that are done might, what we call, have a little hair on them, where you have to explain this or explain that. And if you're just going into a bot or into a artificial intelligent loan application and you input it, and this doesn't meet this and that doesn't meet that, then it's turned down, no questions asked. And if you want to, let's say, appeal it or talk to somebody about it, who do you talk to? So I feel like there's going to be that you're facing, but you also are still going to have the need for the people, because if it gets to the point of we need to have a deeper conversation, let me explain this, let me explain that, you still have that opportunity, which is why I feel like, at least in the community banking space, nowhere in the near future will it get to that.
And we had a conversation a while ago a bit about the whole interest rate increase thing, and I want to kind of circle back to that and in this last segment also. Where do you see this interest rate peaking out? Is the solution going to be double-digit interest on money that is being loaned, and does that, quote, slow the economy enough? And if that's the case, do you, and again, I'm asking you to look into a crystal ball here.
Right.
Is that something where the Fed is headed for? And Chair Powell says, well, we've reached that moment, or do we reach the moment and it gets too big that it's become detrimental?
Well, and that's what I don't think that we want it to get to, or they don't want it to get to, is that they've increased it so much that all of a sudden they have to drop it significantly again. What I have seen is the dot plots that they do, basically saying this is where we're going to vote this quarter, and then at the next several quarters going out. There's a few dots that may get into double digits, but most of them I don't see in double digits. Not saying they won't take it there. And there's some of them that think by the end of the year that it may either slow down or even start to drop just a little bit. But again, that's like looking into a crystal ball, and that's trying to get everybody to vote on the same side. Yeah. But that's, what our economists show us are the dot plots, and that's really all we have to go on, because something like what just happened 2 weeks ago with Signature Bank and SVB could change the dot plot.
Well, so, absolutely.
Yep.
And the reality is that we're talking now as we're doing this show in this moment.
Right.
3 days from now or 2 days from now, things could be changed. Our discussion could be completely different. Your assessment could be different. And I think that's kind of the world we're living in, which adds gravity to, I guess I'm trying to validate everything we said in the show today. Is that it adds gravity, because if we look at it a week from now, 2 weeks from now, it could change drastically. I mean, even small things.
And I still think we'll continue to see prime that just went up 25 basis points probably continue to increase, or they may hold it steady for a little while. because you've seen the slowdown in the increases. They were doing 75 basis points, 0.75%, 3 or 4 times in a row. That slowed to 50 and now 25 or 0.25%. So I could see it maybe staying there or either, continuing to increase maybe by 0.25% every time they meet, or they may hold it steady. But
yeah.
that's outside of my job description.
Yeah. I think, would it be fair to say that one of the things we could probably be confident in is volatility? There will always be volatility in some way.
There will always be volatility. And what is it they say the most constant thing is change?
God. And it's the brave people that step forward and say, even in this environment, I'm going to expand, I'm going to push my business forward, I'm going to increase that expectation, where we're now in a world that is not really a legal or illegal question, but we've pushed the minimum wage now to $15, $20 an hour.
Yep.
I mean, it's kind of demand. I mean, we're seeing people saying we're not going to work,
Mm-hmm.
and I just. Again, I'm the old guy in the room, and I'm going, I don't understand that. How can you not just say, I'm not going to work?
Yep.
Well, but yet, apparently it's happening. It's happening throughout the country.
It is. One of the statistics, I can't remember who said it, but one of the legislatures stated that there's almost 2 jobs for every 1 person looking right now. But they're also not being filled. So
that makes you wonder, is this COVID related? Is this something that has created unnecessary expectation by the government? I've even read an article a while back. The person was saying if the government was not so much involved in it, it wouldn't be quite as bad. So you have all this going on. I'm going to give you about 30 seconds to wrap up here. We're kind of come to a close.
Okay. Well, again, I appreciate you having me on here. It's obviously a great time to be in banking because it's being talked about a lot.
Mm-hmm.
Maybe there's some negative connotation, but fortunately you had me on because what I want to do is reassure your viewers and your listeners that the banking industry is strong, the banking industry is solid, it's resilient. The local banks, the community banks are in the same area. And I'll put in a plug for Southern Bank here too, that
Sure.
We're strong, we're in a great position. We've been around for over 122 years, have very conservative values and philosophy, and a great management and leadership team.
Will Johnson, thank you for being with us. Southern Bank Regional Manager, Vice President. You heard it from the person that knows. All is good. Keep your money in the bank. We'll see you next week, and may God bless.
Thank you for tuning in to this week's episode of We Should Know with host J.W. Simmons. If you have a question, comment, or suggestion regarding this or any episode, please send your emails to weshouldknowedu@gmail.com. And remember to tune in every Tuesday at 2:30 for another informative episode of We Should Know.